أعوذ بالله من الشيطان الرجيم بسم الله الرحمن الرحيم الحمد لله الصلاة والسلام على رسول الله السلام عليكم ورحمة الله وبركاته. So this is the income statement, solution to the income statement. You can compare this with the answer that you have, and I will also post the solution on Blackboard after the class, inshallah. Should I go to the next one? This is the income statement. Did you get it right completely? Anyone got it right completely?
Yes. Yeah.
MashaAllah, very good.
Yes.
Yes.
Very good. This is the statement of retained earnings, right?
Yes.
If you got it right, right?
Yes.
Okay,
Yes.
very good, very good. And this is the balance sheet. This is the more involved statement. Okay,
Yeah.
all right.
I have a question here.
Yeah, go ahead.
Yeah. This is for the whole year. Yeah.
Whole year, yes.
Yeah. Okay. Regarding to the equipment, because when I go to the example that I presented in the slides, previous slides, usually the equipment will be used for the year. So there is a depreciation.
Very good.
Okay.
There are many other things. That's a very good question. Depreciation would be, there are many other items that are there that is not included in this exercise. So this is not a complete picture. This is just a starter for you to get a little bit of practice with the items.
Okay. So usually if there is a depreciation, so it will be entered in the income and here. So it will be
Yes.
equipment. Okay.
Depreciation is one of the complicated items in the accounting process, and we're going to discuss that in more details. It will come. Today is just the first session, so we're just doing a little bit of each statement, and there is more to come, inshallah.
Okay. Thank you.
Okay, very good, excellent. Yes, Ms. Sawsan, go ahead.
Doctor, I have a question.
Yes.
Under the revenue, it's always only service revenue?
No, it can be service revenue. It can be from sales of items, right? You can have, for example, if you're selling a good, then it would be from sales, not service. And then underneath that, you would have something called cost of goods sold. So again, all of these will come. This is just a starter, and it's not always service revenue. Service revenue is only for the companies that provide a service. Right? Does that answer your question? Okay, no problem. Okay. Any other questions in regards to this exercise? Okay. All right. Now let's go back to the few things that we haven't discussed. The next thing that we're going to discuss, the next statement, which we did not discuss yet, is the statement of cash flows. And the statement of cash flows only includes those items where you have either paid cash or you have received cash, right? And this is divided into three activities, right? Operating, investing, and financing, based on what we have discussed. And if you had a sale, for example, if you sold to a customer who has not paid, it would not be in the statement of cash flows because we have not received any cash. Similarly, if you purchased an equipment and you have not made the payment, then that would not show up in the statement of cash flows. The statement of cash flows only have those transactions where either you paid cash or you have received cash. And it's a bit complicated to prepare one, and that's why I'm not giving you the task of preparing a statement of cash flows. But what we need to know for now is the statement of cash flows only includes those items where you either paid cash or you have received cash. Okay. And the interrelationship between this statement and the statement of and the balance sheet is, at the end of the period, right, whatever the amount of cash is, it would equal to the cash on the balance sheet. So here, as you see, when the business started, the cash was 0, and when the month ended, the cash was 15,200. This would be equal to the cash on hand in the balance sheet. So the ending balance, not the net increase in cash. Here, the net increase in cash is 15,200. Because the beginning was 0, the ending is 15,200. But the difference between what was at the beginning and what was at the end, right, or what has changed, would determine the ending balance. So the ending balance of cash is reported in the balance sheet. The statement of cash flow shows the amount of cash either increased or decreased because of the cash activities. Now let's put it simply. You have cash coming into the business and you have cash going out of the business, right? For whatever reason, right? You have cash coming in either from customers or from a loan or from wherever, and then you have cash going out either to the suppliers or to the bank, wherever the money is going. There is cash coming in and cash going out. There is a difference between what is coming in and what is going out. That is the net change in cash. If more cash came in than you paid out, then there would be an increase in cash. If more cash was paid out than you got in, then there would be a net decrease in cash, right? And whatever the ending balance of your cash is going to be shown on the balance sheet. Is that understandable? Are you following, Ms. Mariam?
Yeah, Doctor, I just had a question. What if it's negative? Like, what if the end there's less, like you spent more than you gained?
Right. So you have to have the money, right? So now here, let's say you have 15,200 at the end of October, right? Which means at the beginning of November, you're also going to have 15,200. All right. Now, let's say during the month of November, you gained from your customers, you got $8,000 in cash from different sources, and you had to spend 10,000. That means what happens to cash? Did it increase or decrease?
Increased.
Decrease.
Decreased, right? Decreased by how much?
2,000.
2,000.
2,000. That means the ending balance of November is going to be how much?
17,200.
How much?
17,200.
Is the other way. Is the other way.
It's 13.
It's
Yeah, minus
13.
13,000. Yeah.
It's 13, right? Because you
Yeah.
have to pay 2,000 from your savings from the previous period, right? You had 8 and you paid 10. Where does the 2,000 come from? Whatever you had, right? You follow,
Yeah.
right? So you can have in one period decrease, but it would come from the money that you had in your account before. Does it make sense?
Yeah.
You cannot pay more than, you cannot have a difference of more than 15,000. You understand? Because you won't be able to pay that money. You cannot go into a negative cash ending balance because you have to pay, right? If you don't have more than 100 riyals in your wallet, you cannot pay more than 100, right? So you cannot open your wallet and you cannot say I have a negative 20 riyals in my wallet. It cannot be,
Yeah.
right? You follow?
But what if the cash that's coming in is not enough? Like,
Right.
it's not as much.
Right. So let's say you have cash coming in that's not enough, and you have suppliers you have to pay. In that case, either you have to pay get your money from the bank to meet the extra need, or you can sell more stocks and get money from the stockholders. Either way, you have to get cash from somewhere and then pay. the suppliers. All right.
Oh, yeah. Thank you.
You're welcome. Okay. Good questions. Any other questions? Okay. So now, when we have these statements, an idea of these statements, along with some other items, are reported to the stockholders every year. It's called the annual report. This is the mandatory report that is provided to the shareholders, the banks. It's published. It's public information. It includes the financial statements, the statement of cash flow, the income statement, the balance sheet, the statement of retained earnings. And then it has these three other elements: management discussion and analysis, notes to the financial statements, and independent auditor's report. These three we're going to briefly discuss, and then we will end maybe in 10-15 minutes, inshallah. The first one is management discussion and analysis, which is included in the annual report, MD&A. What does it include? It includes the company's ability to pay the near-term obligations, meaning the company has a loan that it must pay in 6 months or 1 year, right? It discusses, the management discussion and analysis discusses whether the company is able to pay that money or not, its ability to fund operations and expansions, and its results of operations. So there is a report which is called MD&A, Management Discussion and Analysis, where the company, the management of the company, the accountants and the managers, they discuss how the company is going to operate in the near future, how it's going to pay the obligations, and how it will run its operations. And in it, the management highlights the favorable and unfavorable trends, and it also identifies anything that is significant, anything that is important. Maybe there is a launch of a new product, or any uncertainties that would affect these factors. So maybe this year, the annual report will include, for many companies, the uncertainty of sales in the next 6 months, right? There are certain businesses that do well during the winter because people go out and have picnics, etc., because we have a good weather during winter in Qatar. The company's management analysis, discussion and analysis will discuss the uncertainty that because of the pandemic, maybe their sales are not going to be as it is normally during the winter months. So this gives the shareholders, the investors who read the discussion, an idea about what's in the future. All right. The next item in the report is the notes to the financial statements. Here, certain things, when you look at the financial statement numbers, they're not clear for an average individual, and sometimes they're not even clear for an expert accountant. You have to provide additional details. It could be details on how the company records the depreciation, or how the company recognizes revenue. There is an example here, right? Let's read it. It says, revenue net of applicable provisions for discounts, returns, allowances, and certain advertising and promotional costs is recognized when products are delivered to customers based on a customer purchase order and collectivity is reasonably assured. So what the company is saying here, I mean, this is very legal, this legal language. What the company is saying here is that a sale is only recorded as a sale when the company believes that the customer will pay for this product and the product is delivered to the customer, right? So this is what these notes to the financial statement here, this particular note is saying. So like this, and for an average individual, most people will not read the notes to the financial statements other than any particular item that is of interest. So for example, let's say there is a court case. You have stocks in Toyota or Honda, and they have a legal case pending in the court, and there may be some discussion in regards to that, either in MDA or in the notes to the financial statements, and you're interested to know more about that, you will find it here. Otherwise, this section is 30-40 pages, and unless you have problems sleeping at night, and you will not read something like that, it would make you fall asleep very quickly. So it has details about different items that are not clear from the financial statements, and if you're interested to know more about them, you can read the notes and you can read the management discussion and analysis. Is that clear? These two items, it's more information. Okay. All right. The last thing here is the auditor's report. Now, the company's management, the accountants and the managers of the company, they are responsible. The CEO, the CFO, the operating officer, and the chief accounting officer, they are responsible for preparing the financial statements. The financial statements of any public company is audited by an external auditor. The external auditors are from outside. They don't work for the company, and they come and then they do an independent audit of the information reported in the financial statements, and they give an opinion. They give an opinion as to whether they believe the financial statements are fairly stated. Now, the auditors cannot look at every single item that is recorded in the financial statements. The auditor's job is to see whether the financial statements are true and fair, not entirely accurate, because if you try to find out if there is any small mistake or any immaterial small inaccuracy, then it will take you a long time and it is not efficient. The auditor's job is to come and see whether there are big mistakes or big items that have been skipped. If the auditor feels reasonably assured that the company's financial statements are prepared fairly, and the picture represented in the financial statement is a true picture of the company's situation, then the auditors issue a report, an opinion saying that the company's financial statements are true and fair. And this is an example of an auditor's report. We're not going to read it. You can read it, and it's also the language is very legal, because if the auditor gives an opinion and the opinion is wrong, then the auditors may end up having a court case against them. So they have to be careful in what they say, how they say, and so forth. So it's very the language is very legal, right? And sometimes the client or the people reading the report, they don't understand the language, and they get sometimes offended, and they feel like that the auditors are not saying what they're supposed to say. I have had many phone calls and discussions with clients when I was working in the US, explaining to them that what is the purpose of the report, and what we sent to them was not necessarily against them, but it was to say what we did and what we did not do, right? Anyhow, so this is also a part of the annual report. So these four things: the financial statements that you looked at, the management discussion and analysis, the notes to the financial statements, and the auditor's report, which is testifying that the financial statements are true and fair from an outside examiner. Okay. All right. Now the last slide about a couple of things. There are two sets of rules based on which the financial statements could be prepared. One is IFRS and the other one is GAAP. The IFRS, International Financial Reporting Standards, these are developed by a board called IASB, International Accounting Standards Board, which includes certain rules and regulations on how to prepare the financial statements. This is for companies operating usually outside the US, right? And the US has its own set of rules. It's called US GAAP. generally accepted accounting principles. GAAP stands for generally accepted accounting principles. The difference between the two, the big difference between the two, is the IFRS. The IFRS is principles based, meaning the IFRS provides broader guidelines as to how to record items and so forth, whereas GAAP is rule based. It's more detail oriented, that what you can or cannot do with accounting practices and different accounts, and how the calculation should be, and if you adopt one calculation, how you cannot switch to another calculation. So my background, my training and my work is, you can imagine, you can guess, it's based on GAAP. So IFRS is slightly different, but they all prepare, both of them prepare the same financial statements, and the end result would not be, you know, the difference of day and night. It would be something close, but there are some differences between the two. So you can have a different amount reported in net income if you calculated the net income based on IFRS rules as opposed to based on GAAP, right? So there could be some differences, but it should not be a huge significant difference in most cases. However, there is a possibility that it can happen. Okay. All right. So that's I think good enough for one day, inshallah. Do you have any questions, Mr. Muhammad? Go ahead.
Yes, doctor, please, regarding the income sheet, while calculating the expenses, the account payable and the notes payable, it cannot be included within the expenses?
The accounts payable and note payable? No,
Yes.
they are liability items. They are not something that happens over a period of time. The notes payable and accounts payable are amounts for a particular day, on one particular day. Revenues and expenses are for a period of time, right? So you can sell over a month, but the amount that is due to you from a customer is going to be determined based on a point in time. So what does the customer owe you now, right, on 31st of October? Because this amount changes as the customer buys and pays back, right?
Okay.
Okay, very good. Other questions? Okay.
The
Was it?
the
Go ahead.
common stock, doctor.
Yes.
Can you
Go ahead.
define it, please?
The common stock is the ownership of the shareholder in the company. So here, if we come to the balance sheet here, right, this 10,000, right, is given, the ownership is given to the shareholder in exchange for $10,000 in cash. So the cash is received, which is an asset, and $10,000 in ownership is given to the stockholder. So the stockholder has 10,000 in equity in the business.
Okay.
Okay, and this is just like when you buy a car, you have this ownership document, the card, the istimara, that shows that you own that car. If you buy a building, there is a document that proves your ownership. Just like that, you have something called a stock certificate that shows that you own this much shares in the company. Now, this amount in the stock. This is the historical cost. This is what you paid. The day after you buy the stock, the market price of that stock could be more or less, right? Just like the market price of the car or the building that you bought 1 year, 2 year, 5 years from now could be different. But this shows historical cost. This shows what you paid when you purchased it. Does that make sense?
Yes, thank you, doctor.
Okay, very good. You're welcome. Other questions? Okay, was this your first class, or did you have classes on Sunday and Monday nights?
Yeah, we had a class. I had a class on Sunday.
right? So what is the
I
class
think
on
we
Sunday?
are all of us in the same
Yeah, all
Yeah.
of us are the same one. Yeah.
It's on Sunday.
Introduction to
management.
management.
Introduction to management. Very good. How about yesterday? You didn't have anything yesterday?
No, I
No.
didn't have anything.
Okay. So do you have also the economics class this week?
Or finance.
No,
Finance
finance tomorrow.
Tomorrow you have finance. Who's teaching finance?
دكتور محمد.
Thursday.
دكتور
Tomorrow is
محمد الجمال. I
Muhammad
believe.
Jamal, yeah.
okay. Tomorrow is Wednesday, right? Okay. So you have 3 classes or 4?
3. Mine is
3.
3.
Yeah, 3.
Okay. Very good. The management. Who's teaching management?
دكتور ياسر.
Dr. Yasir.
Yeah, sir.
Okay. Very good. Excellent. Inshallah, you will all do well. If there is anything you need, my email is open 24 hours. As soon as I see the email, I will respond, inshallah. And perhaps we will resume live classes somewhere down this semester. But either way, anytime you need, have a question or anything you need from me, you can send me an email, inshallah. All right? It's my pleasure having you all. And I
Thank you.
So much, Doctor.
hope you'll have an excellent semester, inshallah.
Thank
Thank
Doctor,
you,
could you
Doctor.
send the
Thank you.
report?
You're most welcome. I'm sorry, say that again, Miss Ala, you said something?
Doctor, could you send the report through the email?
Which one?
The record, the lecture equal? The record for the lecture?
Oh, yeah. The link, I can send you the link, I believe I can. I will have to check, inshallah.
Okay, thank you.
But you should try
And
to get the registration resolved, inshallah, by next Tuesday, inshallah. And
Inshallah,
we're
hopefully.
working on it, inshallah, to get it resolved.
Inshallah.
Okay. All right. All right,
Doctor,
then
you
I
will
will
post the
go ahead.
solution today on the exercise, just to keep
I'm
it
going to
in.
post, yeah, I'm going to post the solution in Blackboard, inshallah. And also for those who do not have, just you have my email. So if you do not have access to Blackboard in a day or two, remind me and I will send it to you via email, inshallah.
Yeah, Doctor, I just have a question. It's not related to the lecture, actually. It's related to the type of the exams and test. Is it gonna be problem solving or it's essays or which kind of test?
It could be a combination, and we'll see how the exam happens. If it is face to face versus if it is online. And I have posted some practice questions. It will be available to you at 9 o'clock. So in Blackboard. And again, if you do not have access to Blackboard in a couple of days, email me and I will send it to you. Everything in the email as well. The link to the videos and the items that I've posted in Blackboard. But there are some practice questions. So spend some time in studying the material that we covered today. Maybe spend 40, 50 minutes in reviewing it, and then attempt the practice questions, right? Attempt the practice questions, and I will try to have some practice questions available for you every week, inshallah, so that you can get some practice. And the exam questions should be similar to what you have in the practice questions, inshallah.
Doctor, I had a
Inshallah.
question regarding the textbook for the class.
Yes.
It's showing that it's not available.
It's not available in the
Bookstore.
Yeah,
The
the
hard
electronic book is available, but the actual book isn't.
Okay, get the electronic copy. Get the electronic copy.
They're the same book?
They're pretty much the same. I mean, even if you were to study this from a totally different textbook, it would not be a whole lot different. You know what I mean? Right? But if you have a different edition in the electronic copy, this is not a big deal, right? Make sure you study the topics that we covered in class very well, and then have an idea about the other things.
Okay. Thank you so much,
Okay.
Doctor.
No problem. My pleasure.
Thank
All
you.
right. Have a good night, inshallah. Have a good week, and I will see you, inshallah, in this session next Tuesday.
Inshallah. Thank you so much.
Thank you, Dr.
Thank
Good
you.
night. Assalamu alaikum. Thank you.
Wa rahmatullahi wa barakatuh.
Yes.